Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now here's your host, Michael Fleming.
Hello, everyone. Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which is, of course, sales tax. And today we're going to talk about sales tax audits. And we've got the head of our audit and VDA department with us, Sabrina Hidalgo. Sabrina is a former Mississippi state auditor, and she's always got some great insights whenever I talk to her. So with audit activity increasing, and we're seeing more and more audits at this time, I figured now was a great time to speak with her. So that's what this episode is going to be about. I think it's going to be a really good one. But before we get started, let me introduce you to my co-host, Ellie Moffett.
Hey everyone, great to be here. And I'm also excited for this episode and to speak to Sabrina. Mike has some really great questions for her. I know she has some hopefully she has some great responses in there too. I guess time will tell. But I'm going to do a quick introduction for Sales Tax and More. So we are a full service consulting and solutions firm. We have a really great team here of experienced tax professionals, including Sabrina, who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, consultations, research, audit defense, exemption certificate management, and like our name states, more. So with that, Mike, I'm going to turn it over to you and let's get started.
Okay, well, thanks very much. And, I mentioned we're seeing audits increase, and one of the reasons why is when states see a decrease in revenue, and there's a number of reasons why states are seeing this. I mean, inflation cutting into people's discretionary spending, people spending less, means less sales tax, companies make less money, there's less income tax. So the states have to make up for this revenue loss. And one of the ways they do it is by increasing compliance efforts. So Sabrina, with that as our backdrop, what are some of the reasons why someone would be audited?
Yeah, of course. So a lot of people, they are audited through discovery units, which the state has set aside just to send out letters to find out more about their business, figure out things they're doing. If they should be paying sales tax, they go through a list if they should be paying more or less based on your company's normal business activities. There's also refund claims that they will audit you based off of, because obviously states doesn't like giving back money that you've already paid them. There's internal databases that they can sort and filter if, for instance, there was a new change in law or something that they've seen an error in the past with past businesses. They can go through and sort that particular business activity and pull those and then randomly pick you. My favorite part of being picked is from having an internal list from a previous audit. So at one point, I was doing an audit, and you have to go through different receipts from other businesses that you have contacts with. And I pulled an audit just by a receipt. So you go on an internal list that nobody knows of. It's just luck of the draw. And they can pick you from a simple receipt of doing business with another business that's being audited. Those are my favorite.
Yeah, and that's one of the things we talk about quite often, Sabrina, is that when an auditor is looking at your records, they're not just looking at, your sales, making sure that you have collected the right amount of tax and you've remitted all of the tax that you've collected. They're also looking at your purchases to see if you've paid tax and who should have been collecting that tax. So I think that's what you're talking about there. Finding companies through the audit of another company. So that's thank you for sharing that. That just proves what we've been saying for many years now. Now, you mentioned discovery units. And discovery units, often lead to audits, but that's for companies that generally are not registered. And that's the way that I see it. Am I correct there, or are there discovery units for the companies that are already registered also?
The discovery units are majorly for the people who are not already registered because they're trying to discover if you should be registered or not. I guess more on the internal database they have that they pull directly from. But those discovery units, they will also send a list to our audit managers, and then the audit managers will send us a list out and say, "Hey, you need to go do this." Another way we were tested on was if you see a business out with a truck that has their name on the side of their truck, plumbing services, you should write the name of the company down, bring it back to your desk, and Google to see if they what they do, first of all, which if it says plumbing, you know what they're doing. If the services should be taxable, then you go into the system to see if they're registered, and that's how you discover them. So we've been trained to actually just take simple truck running down the street. If you pass a business and you think that they're not registered, write it down and bring it back to the office. And they can find them so many different ways.
So personal observation and experience, auditors are people too. I always knew that auditors did this. I didn't realize that it was actually being trained into them. I just figured it was something that they picked up on their own. So interesting to know that. Now you mentioned refund claims. We have some clients who had some tremendous refunds, and I know that this actually did result in some audits. You want to explain about that a little bit more?
Yeah, of course. So the refund claims, obviously, states like to receive money. They don't like to give money back too often. So if you have paid them money and you request a refund to get that money back, now they're like, okay, well, why did you pay this to us in the first place? And why are you requesting it back? So now they're going to go through your books to try to find any and every way to not give this money back to you. So even if for whatever reason your refund claim is valid, they're going to find another instance in your books to make that money go towards what you should have paid somewhere else. So just for that refund claim, you may or may not be in, even though you're entitled to it, they're going to open an audit and say, okay, well, now you owe that money and we're going to put it towards this part of your business that you should have been paying on already. So they're not, I'm not going to say they're not going to give it to you, but they're going to make it hard to get that refund.
Yeah, and we're not talking about, small refunds or, run-of-the-mill refunds. We're generally talking about large refunds. It's not always worth, states are busy. It's not always worth their time and effort and energy to go after, $100 refunds. We're talking, thousands and thousands or tens of thousands or millions of dollars worth of refunds. The larger the refund, the more likely the state is gonna come after you. So the problems that companies run into, I would assume, in my experience, it's been documentation. Companies are just not keeping or not getting or not providing enough documentation to support their refunds. Is this what you see out there with us, and as when you were on the other side, when you were on the side of darkness, before we turned you to the side of goodness and light? Were you experiencing that there also? Was it a lack of documentation, or?
Yeah. I feel like a lot of companies don't realize, like, just because you say this is how it should be done, it's not how states do it. It's a little more delicate. There's more work behind it. The auditors try to do a good job of making it make sense, but you also have to provide a reason and the documentation, supporting documentation, and correct supporting documentation to support those claims. Even if it's true and accurate, you still have to have documentation.
And sometimes it's not enough to have any old documentation. A lot of times, some people will try to provide us internal documentation. A lot of times, the states or jurisdictions, they want to see the source documents, what everything stems from, what the customer is seeing, um, details of the transaction as reported by perhaps credit card receipts or the actual invoices, not journal entries. Is that generally the case? Or it could be
Correct.
important. The journal entries could explain the source documents. But in my experience, the states are still want to see those source documents.
And that's correct. So, like I said, sometimes what you think is enough supporting documentation, it's not exactly what the state would call the correct supporting documentation. So, like the documentation, like you stated, needs to be a source document. A journal entry is just too broad, like that, something that you just put in there. And even though it's correct and very well, it probably is correct, you still have to have that documentation. So if you're doing a refund claim back 3 years ago, you would need that supporting documentation from 3 years ago and not just your word if it's correct and the reason why.
Great, good to know that. Thank you for that information. Now, I want to move on here. I want to talk about some parts of the audit process, and maybe we'll have you back and really go through the process from start to finish. But right now, I want to cherry pick some different parts, some of the parts that have been giving us problems lately when we're defending our clients in audits, like internal controls. Can you talk about, that? I know that Canada is real big on it, and we've got an issue with Canada right now. But when a company's looking at internal controls, what are they actually looking at or for?
Yeah, so they're looking and testing to make sure that you're doing what you're supposed to be doing, that there's steps to it and not one person doing every single thing. That could go back to someone either stealing or not doing it the correct way. So they really like to have see a process of how everything's done, who's touching it, who's doing what, so they can really test if those internal controls and how things are being placed inside the books are being done correctly. When they test those internal controls, they do request a lot of information. And sometimes this takes the client, they gasp a little bit and they're like, well, they don't need that to know how much sales tax we're collecting. But the thing is that when you start at the beginning of an audit, they need to test those internal controls so that they can go to the next step. If they don't have an accurate picture of if your internal controls are being done correctly, then how can they trust that you're doing your sales tax returns correctly?
And that's an important point. I mean, if I've seen audits where the auditor said there's a lack of internal controls here, and the audits usually go downhill from there. It's hard to defend someone when the auditor believes they're not doing things the way that things should be getting done, that there's not a system of checks and balances, that you can't just take the company at its word. So internal controls, in my opinion, is, not all auditors do it, unless some states, if it's a regular run-of-the-mill audit, don't make it a big issue. But, we talked about refund claims earlier, and, exemption certificates, another area. There are certain types of audits and certain auditors that this is going to be real big sticking issues. So we've got to make sure that each company that we're working with does have internal controls and does keep the correct documentation and follow their own process. So it's important that in order to be able to follow along.
Yeah,
So
exactly. The important thing is that you can make the auditor follow your books in a line and not say something like, well, we don't have that, or we can't get that, or well, that's not how we do it, so you can't have that documentation. Those are not very good lines to be saying to an auditor. You need to figure out a way to do it or a workaround, because there's always a way to get something, or there's an option to do it another way to make the auditor understand how your books are ran and that it's being done correctly.
absolutely. And we always say here, you need to have a good working relationship with the auditor, because the auditors, believe it or not, they have a lot of power in the audit. They can push for things to be waived. They can work with you. If there's a gray area, you give on something, they'll give on something. I mean, it's got to be a good working relationship as you're going through this audit. And if the auditor believes, that you've got these good internal controls, that you're doing things correctly, the auditor is going to be in a more favorable position to work with you than if you start off button heads and they believe that you don't have these good internal controls. All right, so we always hear these stories. Someone was in Michigan and they wanted to run the auditor off, so they put him in January in a blockhouse storeroom with no heat, and they were there for 10 minutes. And I always say that that's absolute. Auditors are human, and if you make their life miserable, they're gonna get the last laugh. Do you have any stories like that? What have people tried to do to you?
Yeah,
If they
definitely.
have.
So they always, I have had that happen. They tried to put me in it was a back warehouse in the right outside of the cooler. It obviously didn't have any heating. So, and it was in wintertime. I remember being so cold and shivering. They did offer me a small space heater for my feet. It was still so cold in there though. I've also had people say they have no electronic records and bring me in boxes and boxes and boxes, 5, 6 boxes of like huge boxes for me to go through. And obviously I have to type all this in piece by piece into a spreadsheet to be able to really go through it. And yes, we do have the last laugh. I like how you worded that, because if you make my life harder, I'm probably gonna look harder for ways to make you pay more instead of just letting it slide.
Yeah, absolutely. Now, Mississippi, not quite as cold as Michigan, but everyone has different tolerances. So I've heard the exact opposite too. I've heard, someone in Austin, they put them out in a trailer with no air conditioning in the middle of August, and it's 110 degrees. So if you make an auditor's life miserable, they're going to find a way to make your life miserable. It doesn't end there. And just because you chase them out, a lot of times the auditor may be there for 10 minutes. They're going to go back. And when they get back to their office, they're still going to be working on your audit. And they're going to be less inclined to work with you now and pretty much make you prove that you've done everything correctly rather than give you the benefit of the doubt sometimes along the way. So, yeah, thanks for sharing that. I always like hearing these horror stories. All right, let's talk about another topic. Use tax. I always tell a story about the auditor who told me that this woman was buying short paying the toilet paper invoices because she was a manufacturer. And he joked, he said, Mike, yes, toilet paper is used and consumed, but it's not used and consumed in the manufacturing process. So imagine having to go back to your boss and telling them, hey, I thought I was saving the company some money. I sure paid all the taxes on this. Now we got to pay the taxes anyway that have probably been spent somewhere else. Plus we got the added insult of penalty and interest, all because of toilet paper. You have any stories along those lines, or any horror stories when it comes to use tax? Companies didn't realize they needed to be paying the consumer use tax?
So I think this goes back to another reason of why you would be audited, because we were also trained on, if you saw a big business opening up and you know they're getting in new printers, they're getting, especially doctor's offices or dentist offices, because they don't have sales tax, but they do have use tax. So we would open a whole use tax audit just on the assumption that they've just bought printers and got them shipped in, new chairs, new paper, pencils, all of these, and we would go through and pinpoint all the use tax that they would owe. And before they were really catching on what we were doing, we had high amounts of use tax audits, and they were training us to go out and do these businesses just solely on use tax. Another thing is that in this audit process, again, like I stated before, they ask for so much information in audits. One of those things are assets. And a lot of people are like, well, why do they need to have my asset ledger? What does that have to do with me paying sales tax? And they don't understand or don't realize that a use tax audit is automatically approved with a sales tax audit. So as soon as you get a sales tax, they are going to open up a use tax and usually say either there's no use tax or there's going to be a lot of use tax. So they use those documents to say, okay, well, you purchased this asset on this date, provide that payable invoice just to see if you've paid the sales tax on it.
Yeah, and just because someone doesn't charge you sales tax doesn't mean it's tax-free. I mean, if maybe they didn't have Nexus, so they didn't charge you sales tax, but like we said, that doesn't make it tax-free. You're supposed to self-assess that and remit it directly to the state as a consumer use tax. So yeah, that's either the number one or number two biggest area that we see large assessments coming from. So use tax, very, very important. And like you said, great tip there. If you're opening up a new office, a new location, they're out looking for you because you're making a whole lot of purchases. Whenever there's a lot of purchases going on, states are looking to make sure that you have paid all the taxes on everything that you're going to use in your business. So just because you're a manufacturer doesn't mean everything you buy is going to fit the manufacturing exemption. If you're a doctor, if you're using it in your practice, like all of the furniture and everything, that's usually going to all be taxable. So you got to make sure that if your vendor is not collecting the tax, that you're self-assessing and remitting that tax directly to the state. Before we wrap up here, let's talk about the other big problem area. And for companies that have a responsibility to collect exemption certificates, this is one area that even when companies tell me, oh, Mike, yeah, we got our hands down on this, and then I'll do some sort of exposure review. And they're usually 80% or more non-compliant for what an auditor would be looking at. So in the audit you defended here, you want to just share some of the examples of how lack of exemption certificates or invalid exemption certificates would play a role?
Yeah, so even just recently, there was a client that thought they had collected all their certificates correctly. This is before we were involved, and they inputted an exemption certificate into their system as a full-time use instead of a one-time use. This resulted from their audit going from $20,000 to over $300,000. This is for one exemption certificate that was input wrongly into their system. It's heartbreaking, but it just goes to show that sometimes clients doesn't understand exactly how either a one-time use certificate is being applied or if there should be something in additional to that certificate. Some states request or require additional documentation in addition to just the exemption certificate or just a one-time use certificate. They also ask for other documentation to provide that it's valid. The other thing is that they should be collecting it on time at the time of purchase. Sometimes we can get auditors to accept that in an audit, and we can go back and grab those. But it's very, very useful if you collect those at the time of purchase and collect the correct documentation. That's the key word, is the correct documentation to make that a valid exemption.
Yeah, and you mentioned there this one missing certificate took the audit from 20,000 up to over 300,000, and I've got a number of different examples like that also. But the reason why is that audits are usually done on a sample basis. So, you're not just looking at the tax that should have been on the one invoice that should have been collected. You're looking at the error percentage. And, when you extrapolate that out over the population, what impact does that have? So it's not just the tax for that one invoice. You got to apply it to the whole sample, which is why missing or invalid certificates have such an oversized impact on large assessments. And that's why it's so important that you're making sure that not only are you collecting a certificate, but someone's validating it. We do a lot of validation in our exemption certificate management services that we offer here. And the reason why is, it's like we said, it's not just enough to get the certificate. Someone's got to be making sure, whether it be you or whether you hire someone like us to do it, they got to make sure it's going to survive an audit, that an auditor is not going to be kicking it and you're getting, unfortunately, a $300,000 audit instead of a $20,000 audit. So Sabrina, I've greatly enjoyed our conversation today. I'd love to have you back, but anything else you want to share today?
I think we've touched on a lot of different things, and I think it was a lot of useful information for everyone out there, and I hope they've really enjoyed everything that I had to say and instances that I've provided. Hopefully it gives them insight to go check their books and make sure it's all correct so that if they're audited, they can have everything in line.
Yeah, and I'm going to give a shameless plug on our free webinar, so not too much of a plug there, but our free webinars right now, we're doing a series called The 7 Pillars of a Successful Sales Tax Strategy. And, if you follow these pillars, you're not going to be able to prevent an audit. You can't prevent audits. I mean, a lot of audits are done based upon a lottery. You're just chosen randomly. But if you are audited and you're following these 7 pillars, the amount of assessments are going to be kept to be very minimal or no assessment whatsoever. So, what Sabrina, I think, was saying here is, don't wait till you're audited to see if you have problems. You want to make sure beforehand that all your ducks are in a row and that you have time to fix things before an auditor walks in the door. We could talk to Sabrina, all week long. I mean, I've had conversations with her that have lasted for hours and hours, but we've got 20, 30 minutes today. So like I said, Sabrina, you want to come back and talk with us another time? We'll get into a little bit more detail.
Yeah, of course. I'd be happy to come back and tell more about my knowledge of being an auditor and all the things that can go wrong.
All right. Well, we appreciate that. And we greatly appreciate you joining us today. And we hope to see you on the next episode of the Sales Tax and More podcast. And Ellie, I'm going to kick it back to you to do some wrap up here.
Yeah, absolutely. And, if you're listening to this podcast episode months later, years later, however amount of time, we do have that entire series on a paid portion of our website that you can access. We also cycle through our live free webinars all the time. They all offer CPE credit. They're all a great resource. And like Mike mentioned, if you watch every episode of the pillars to successful sales tax strategy, it doesn't prevent an audit, just like he said, to reemphasize, but it can help you be prepared. And we also offer a lot of solutions and services. You can reach out to me directly if you have questions about them. My email is emoffat, that's EMOFFAT @salestaxandmore.com. You can also go over to our website, salestaxandmore.com, and reach out to us via contact information there. That's where you can find all of the resources, free and not free, on our website. And thank you so much, Sabrina. There's been a lot of really great information here, and we are going to have you back if I have anything to say about it. And thank you so much.
Thank you, everyone.
you.
Bye-bye.
Thanks for listening. Be sure to hit subscribe and check out all the resources we have out on the web.